And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum warahmatullahi ta'ala wabarakatuh. This is Ahmed Shawi by Liquidity Club. Today is the 16th of July 2023. I'll be doing the weekly review of the upcoming month from the 17th of July to 21st of July, and I'll be reviewing the last week and how we traded last week. So let's dive deep into it. So starting with the DXY. As you can see here, we have reached and took this sell side liquidity and the sell side liquidity that I've been talking about the past many weeks. It's all in my videos, it's all there, and I've been aiming for these lows since then. So now we have this bearish order block, and as you can see here, we have a very small inefficiency that is below us. We didn't reach to it, so we're more likely to reach to this inefficiency and draw to it. We have this bearish order block and we have this mitigation block. Price might retrace a little bit, might give us some rejection. We might see some rejection here, and we might reach to this inefficiency. And if we reach to this inefficiency and we close below it, I'll be looking for the sell side liquidity to be swept or reached to. So for now, I'll be holding no bias because after large range days, we expect some consolidation. And this is the daily chart of the DXY. As you can see, this is the sell side, we swept it, and this is the ultimate external range liquidity, sell side liquidity. This is internal range liquidity, and this is external range liquidity. We swept both of them, and we were very close to reach to the inefficiency that is outlined in purple, I believe. Going into the ES, the weekly chart, as you can see, last week we've traded above. We took the volume. We traded inside the volume imbalance. We traded above and closed above the consequent encroachment of the premium wick, this premium wick, and we reached to the real liquidity void. This is that highlighted in the light blue color, I believe. Notice what we have here. After we have rebalanced this favorite gap efficiently, we've rallied up higher. This would be a bullish order block, and this would be also a bullish order block, but it is classified as a bullish propulsion block. So we have here the propulsion block. Price might retrace a little bit down. I'm still looking for the rest of the real liquidity void to be filled, and if we retraced a little bit and we traded to this bullish propulsion block and we've seen some rejection from this level and it started trading higher, I'll be looking for, and we traded above this real liquidity void and closed above it and treated as a support, the high of it. I'll be looking for the buy side liquidity next to be reached. So for now, I'm still favoring a run to the upside, as we still have a small inefficiency. As you can see here, we haven't filled it completely. There's still a very small gap that is still yet to be filled completely. So this is like the rejection level. This bullish proportion block. This is a bullish order block, but it is classified as proportion block. So I'll be looking for rejection from this level that potentially sends us higher above this real liquidity void, and that this can be treated as support that sends us higher to this buy side liquidity. This is the daily chart. As you can see here, this is the fair value gap that is highlighted in blue, and how we traded up higher. We took this buy side liquidity. I've mentioned in the last weekly review that we made a lower high here in the NQ, but in the ES we made a higher high. this doesn't matter because we still have this doesn't sound like an SMT because we still have a higher time frame objectives to be reached. So as I've mentioned in the last review, I'll be looking for the 3 drives pattern, and in fact we did make it. So we were trading here last week, and I've mentioned that I'll be looking for another run to the upside, forming the 3 drives pattern, which is high, higher high, and the higher high. This is a very common signature price that when seen, it is very likely to see a reversal. But still, as I've mentioned, we have the proportion block, and we might see a continued run to the upside, filling the rest of this real liquidity void. Going into the weekly chart of the Nasdaq, I'm using the continuous contract because on the current month contract, which is September, and it's outlined as NQU 2023, this September contract. But as we don't have much data shown previously, we will be using the continuous contract, which is highlighted by NQ1 exclamation mark. So as you can see here, as I've mentioned that in the ES we've seen some rally, the same is seen in the NQ. So the same premise is there. As you can see, we traded down, reached to this weekly inversion fair value gap, and we started rallying up higher. We closed above the mean threshold, the consequent encroachment of this bearish discount wick of the order block, and we've reached to the bearish order block that's here, and we've seen some reaction. I'll be explaining this reaction later on. So this is the daily chart. As you can see, this is Monday trading. On Monday we traded lower, reaching to the discount wick consequent encroachment of this candle, and then we've seen some reaction. Remember, we treat wicks and tails as gaps. So price trades on Monday trades below, trades lower, reaching to the consequent encroachment of this candle's discount wick, and then started spooling higher, reaching to the buy side liquidity targets that I've highlighted earlier in the previous weeks. This is the lower high that I've mentioned earlier. This is the 5-minute charts when we reached to the bearish order block. This is on Friday trading. As you can see here on 10 a.m., which is what? Which is the beginning of the silver bullet, AM silver bullet. Price trades up higher, reaching to the bearish order block, creates a high, then we look for a short-term low. This is short-term low. Price trades aggressively below it. Then we'll be looking, you can look for any BD arrays to go short at. So as you can see, price relative to this dealing range from this high to this low, price retraced all the way up to the premium market, and it reached to this rejection block and the consequent encroachment, the premium of this premium wick, and then it starts selling lower, reaching to this drawn liquidity. So this is the thank God it's Friday, also known as the TGIF setup, that is taught by ICT on his YouTube channel. Going into the Dow. The Dow on the weekly chart, we've seen that price is like the sixth system. It's finding difficulties to rally up higher. However, last week we formed the outside candle, and it's an up close candle. So when you see an up close candle, when you're bullish, when you see an outside candle that is upside, that is up close outside candle, when you're bullish, this is a very good sign that you might see a continuation to the upside. Why? Because on the opening we opened and we swept sell side liquidity that's resting here, and then we rallied up higher, taking this buy side liquidity. So we've engineered liquidity here earlier last month for these 4 weeks, these 3 weeks, and then we swept this low, these lows, reached to this order block, and then we rallied up higher, reaching to this buy side liquidity and the consequent encroachment of this premium wick. So I'm still favoring around to the buy side liquidity here, but I'm not forcing anything because as I've stated earlier in other videos, I don't like trading this index because it has a very sloppy price action as highlighted here, as I mentioned here. As you can see here, it's very sloppy price action, especially the last month. We've seen like a very brief consolidation. So yeah, that's pretty much it for the Dow. Going into the Euro USD, also known as the FIBA. This is the weekly chart. As you can see last week, price is just going as I've anticipated for the last previous weeks. Price has swept this buy side liquidity, has ran actually this buy side liquidity, and it has ran this buy side liquidity, and it has reached to this volume imbalance, and also has run this buy side liquidity. So now we're inside this volume imbalance. I'll be looking for price if price wants to go. This is a mitigation block here. So if we retrace a little bit and this mitigation block, this PD array offers some rejection, we might trade above the volume imbalance and treat it as support that can send us higher to this buy side liquidity. So generally, I'm still favoring around to the buy side liquidity or to the upside. Firstly, to fill this volume imbalance, and then secondly, if we treat the high of this volume imbalance as a support, I'll be looking for this buy side liquidity to be swept or perhaps run. This is the daily chart. As you can see, we have this buy side liquidity, which is this level here, which is the 1.101 basically. So this is a 1.101 and this one here, both of these. So we've been accumulating positions here in this fair value gap that is not showing here because this is a lower time frame, but on the weekly, as you can see here, this is the fair value gap that I have outlined on the daily. So we've accumulated positions, we've accumulated long positions here, and then we've rallied up higher, running this buy side liquidity, running this buy side liquidity, which is a relative equal highs, the declined highs. That is another discovery, and we've reached to this volume imbalance. That's pretty much it for Euro. Going into the pound USD, also known as the cable. This is the weekly chart. As you can see, last week we've traded above, we traded through and above, and we closed above this drawn liquidity, which is an inversion fair value gap, and we've reached to the bearish order block, which is the target that I've highlighted here. This is a bearish order block, and it's classified as a propulsion block. Why? Because we have a bearish order block here, and this is another order block that is inside this bearish order block and has a lower low. You can refer back to ICT's core contents. Month 4, you will see the teaching about propulsion blocks, where he will be teaching it way more better, and you can get more insights about the propulsion blocks. Anyway, since we've traded above it, I'll be looking for these inversion fair value gaps to act as a support, and we'll also close above the mean threshold of this propulsion block. So I'll be looking for price, preferably to retrace a little bit, make this potential fair value gap efficient and rebalanced, fully rebalanced, reaching to this order block, maybe treating this inversion fair value gap or this inversion fair value gap low and this inversion fair value gap high as support, and then that will send price even further more higher to reach this buy side liquidity. So overall, I'm still favoring around to the buy side, but at the moment I'm holding no bias. I'm just monitoring and tape reading what price is going to be doing. In the meantime, going to the daily chart, as you can see, this is the inversion fair value gap. We trade above it, trade back down. This is a fair value gap that is not shown here because it's on the weekly. On the dailies, and this is the importance of cycling through the time frames, because some gaps are found on some time frames and some are not found on the other time frames. Not just the gaps, the other things and the other BD arrays. So we went up higher, reached this strong liquidity or the inversion fair value gap on the week chart. It acted here as a resistance, traded below it, reached to this fair value gap, make it efficient, and then we swayed through this inversion fair value gap, the drawn liquidity that is highlighted or outlined in blue or dark blue color. Then we will be expecting price to retrace a little bit, to reach to this drawn liquidity, and we find some support from the high, the consequent encouragement, or the low. These are three specific levels, and this bullish order block that is actually overlapped with this inversion fair value gap high. So that was pretty much it for this weekly review. As I mentioned, price has moved as I've anticipated. You can go back and see the past weekly reviews. I cannot edit them. Just for your info, I cannot edit them. So I've already anticipated these things happening weeks in advance. It's not something that is cherry-picked. It's not something that is market replay or something of that matter. Nope. It's anticipating weeks in advance. For now, I'll not be trying to pick any top or bottom. I'm working with what the market is providing me in the meantime. And I want you to think about this. After large range days, as we see in here, after large ranges, we expect some type of consolidation. So I'll be expecting some kind of consolidation that is overlapped with some, or like mixed, blended with some retracement to these levels that I've mentioned, and then the expansion. So market is moving in 4 states of delivery. It's either expanding, consolidating, retracing, or reversal. So these are the 4 states of delivery. You can study them and go back into your charts, and you will see that this is what is actually happening. These are the 4 things that the price is going to be doing. It's either expanding, which is expansion, retracing, consolidating, or reversing. So that was pretty much it for this weekly review. I hope you learned something from it, and until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.